JK Paper reported its highest ever annual revenues, with revenues in FY22 about 3,969 crores, which is a growth of nearly 44% over FY21. Highest ever quarterly turnover and profits as well, with a 50% jump in the revenues on the back of strong demand. Now the question is, can FY23 be as strong, and is it possible to predict that? Let's pose this question to Mr. AS Mehta. He's President and Director of JK Paper, joins us on the show. Mr. Mehta, congratulations on a strong year and a strong exit to the year as well.
Thank you.
Can you sum up? I mean, is it a factor of? I'm sure it's the factor of the strong demand, but can you tell us about whether the exit was as strong as well, and how is the demand situation looking as we speak?
Good. Thank you so much. And as we see that in the month of December and January, in fact, we were worried about this Q4 also, because the wave 3 had some impact on the educational institution and office working and the paper demand. But as we moved in the month of February, in fact, it was a very strong month, because most places the normalcy started resuming. The school, colleges and everything was likely to open. So the sentiments were also very good, and the reality also on the ground, the demand was very robust in the month of February. And the March was as strong. In fact, the March was, I would say that the best ever month I have seen in my last so many years in the industry was for the paper industry. So the office paper demand, printing paper demand, coated paper demand, and I mean, you talk any product and the demand was very good. So this is one part. But I would say that it is not that it is just 1 month. In fact, right now when we are talking, in fact, the market is good as of date as well. So the April has also been good. I mean, certainly it will not be at par with March, but is better than any normal April in many years. So the demand likely to continue is a good demand and likely to be continued. Reason being, see, all the school, college and those things, whatever the people have experienced in last 2 years about the online education or the e-education, I mean, the people have now realized this, what we used to talk, that the online is not sustainable for a learning thing. It can be an additional device or additional help in learning, but the learning is the physical learning. The virtual learning, I mean, cannot replace the physical learning, because the children and the people would like to have face-to-face and a group learning. And that's possible only when you have the physical classes and physical teachings. So, I mean, there's a realization. Also, we used to say that when you do physical reading, when you do the true writing, and then your concentration, your memorization, retention is far better than what you read on the screen. And this has now, I mean, come to realization for the people.
But is it because of that demand has gone up, or is it that the demand stayed static and you were able to expand your?
I'm just, I mean, creating a kind of a thing where you can understand. So when that realization has come, so in fact, immediately after reopening of this, there is a sudden spurt in demand. This is one part. So now going forward, there should be a normal demand pattern. Yes, there would be some digital intervention where the demand would come down. I'm not saying that the demand would be 7%, 8%, 10%, no. The writing printing segment may likely to have a lower demand, I mean the growth, but it is still going to grow. And even if there is a growth of 3, 4%, 5%, that itself is a good number for the Indian paper industry, because there is no addition on the writing printing capacity. So, and the efficient player will have a better time in the market, even if there is a 4%, 3% growth. Let's say today also JK Paper is fully utilizing 110% of its capacity. So even if there is a 4% growth, what do? I'll just do some kind of improvement and take advantage. So this is one part. So this is one, the demand on the writing printing segment. As far as the packaging board is concerned, there is a very, very strong demand, whether it is food sector, it is FMCG, all other sector. So they are growing very well. And the demand is in double-digit growth. So when there is a double-digit growth, and this is a sizable volume we have after our capacity expansion. Now our total volume, I mean, close to 35% is the packaging, which is a high-end virgin packaging. So in fact, we commissioned the machine in the month of January, and in the March itself, we were at 85%. I mean, right now I'm running the machine at 90%, and the total volume is sold.
Wow.
So, I mean, so this is a demand scenario. And going forward also, our estimate is that India is going to be the fastest paper growing market.
Right.
It will remain a growing market. So the demand, I would say that, yes, inefficient player will have a difficulty.
Got it. Okay.
Or the smaller player may have a difficulty because of the size, scale, efficiency, and all other things. But good, efficient player will have a reasonable, good, I mean, I would say that the business scenario or business outlook in time
remains solid. Okay. Okay. So that's an over-encompassing view. Let me try and put some nuts and bolts. What about volumes and realizations for Q4, Ms. Mehta?
See, the volume has gone up close to 20% plus as the volume. I mean, when I compare last year to this year, and the realization has also gone up by close to 20%, quarter to quarter when we compare. So the realization is good. When the demand is good and there is an input cost pressure, you have ability to pass it on to the market. So we passed it on. Yes, it may not be possible for every paper company, but I mean, the strength and the distribution and the brand, so we were able to pass it on. So okay, that's one scenario. Yes, there was a pressure. I mean, the chemical prices, coal prices, all other, there was a pressure, but we could pass it on.
And if I presume that you will not necessarily cut the prices if those prices come off a little bit. So have the prices come off a little bit in the April, May? No, they haven't. So input cost pressure stays as is.
Input cost pressure remains. And in fact, certain product categories, we have further increased the prices in the month of May.
Okay. So therefore, because QOQ, quarter on quarter, the margins did see a bit of a decline. Could we have some clarity on whether you will need to take further price hikes in order to combat those margins, or would you take a small hit on the margins?
See, I mean, I would say that when you are talking about overall volume and the margin, I would say that right now 27, 26% or 28% margin on this increased volume. Good margin. It's a good margin.
Sure.
Increased margin. See, please understand that the margin would have been higher compared to last year also. But now this volume mix is shifting or is changing. Now you have a more volume from Sirpur, which is not as efficient as our Odisha plant is. Now the volume is coming from Gujarat, which is a just expanded plant, where the capacity utilization in this Q4 was something around 70%. So to some extent, the margin would be lower. So, I mean, that mix has impacted the margin. But otherwise, if I compare my Odisha plant to Odisha plant Q4 of last year and Q4 this year, the margin is better.
No, yeah, but sure. QOQ, the margins came off a little bit, which is I was wondering. So do you?
But I would say that the 26-27% margin on expanded volume is a very good margin.
Of course, it is good. I'm just wondering as to whether you would want to maintain that. Do you think it will improve, or do you think it will stay at those levels?
It's very difficult at this point of time, because we will have to see what kind of a demand remains in time to come. If the demand remains in time to come, and also the Gujarat plant, when it moves to 90% and 100% utilization, I mean, their costs will also come down.
Yeah.
So that those factors will play important role in next 3 to 6 months time.
Got it. So, Mr. Mehta, suffice to say that for FY23, because demand thus far looks to be strong, you would be able to grow over FY22 in the back of the newly commissioned plant in January
Yes,
2022?
Of course. The two things, Gujarat plant as well as the Sirpur should further give us a higher volume.
Okay. Okay. To the tune of 4-5%, you reckon? Or maybe more?
No, should be more.
Should be more. Okay.
4-5%.
Well, I heard your answer saying that maybe the volume growth in the market could be about 3-4%. So I'm just presuming
that's a market growth.
Right.
But
and you
the growth will not be 4-5%. It should be much more.
Okay. The volume growth you reckon will be much more.
Yes.
Okay, great. What about what does this enthuse you to set up plans for newer capacities, Mr. Mehta?
See, I would say that not at this point of time, because the such a big capacity was just commissioned in January 22. So we'll have to wait for some more time. And please understand, I mean, this 2,000 crore investment should give me some money and free cash flow first, so that I start thinking about the next expansion.
Makes sense. So that would probably come in maybe later in somewhere in FY24, if at all.
I mean, anything should happen thereafter.
Thereafter only. Fair call. One last question, Mr. Mehta. What should so aside of the volume growth that comes in, I reckon the realization growth would be a factor of how the input cost pressures behave, etc. What is it that investors look forward to? Higher capacity utilization, newer product segments? What is it that people should look forward to from your company?
See, as I said, that the packaging board, which is the fastest growing product category globally and India. So once our capacity utilization moves to 90%, I will target 100 and 110% or 120%. This is what now our best effort is going to be, the greater focus on the packaging board new capacity, where we will, I mean, extract the best out of it. Once the capacity utilization moves beyond 100%, I mean, the cost substantially comes down, because all the efficiency parameter, conversion cost, energy, and everything comes down. So that advantage we need to take, and also the higher market participation. So overall, the companies, the SN selling distribution cost will come down. Everywhere there will be impact once we utilize that capacity, the new capacity. So that's one part. The Sirpur, our focus will be to achieve 90 and 100%. So once we achieve there, then that unit also becomes a far more profitable, I mean, compared to current profitability. So there also the cost should come down. And certainly, see, the new product is the food grade. That is the future of the product. And we will be introducing many products which will substitute or replace the single-use plastic.
Oh, well, that's the need of the hour as well. So yes, all the best for that, Mr. Mehta. So you reckon that improved profitability in FY23, my last question, that improved profitability will negate the higher tax impact that you saw probably in Q4?
No, see, the tax in any case is a different thing. I mean, the tax, when you have more profit, means you'll pay.
No, the tax rate, I think, went up, didn't it? It went up to 36.
No, it was earlier also 36 as far as we were concerned. See,
I thought it was 28% last quarter and 30% in the last year.
The percentage is quarter to quarter. It depends on some calculation maybe. But otherwise, year as a whole, for us, the rate is something around 34-35%, including
it stays that
tax, including the deferred tax. I mean, tax, I would say that you need to see the year as a whole, because the quarter maybe some calculation of a timing differences, depreciation accounting, and also those kind of things. Okay. Of course, by profession, I'm accountant, but forgotten the accounting, so I can't.
No, that happens. But you're doing a damn good job at JK Paper, so keep that up. And all the best, Mr. Mehta.
Thank you so much. Thank you.
And thanks so much for speaking to us today.
Thank you so much.
Viewers, thanks for tuning in.
Thank you.